HARPTA and FIRPTA. What the heck are these?
What are those?
Aloha, my name is Stephen Prosky. I'm a real estate broker with Relocation Kona and Compass Hawaii here on the Big Island. If you are new to my channel, welcome to my ohana. If you are returning visitor, mahalo for coming back. I appreciate it.
Mahalo, my dear.
After watching this video, if you have any real estate questions, you can contact me at one of my sources below or just leave me a comment. I'm never too busy for you. Today, I'm going to be talking about HARPTA and FIRPTA. Back in the day, anybody, including foreign investors, could purchase property here in Hawaii, keep it for a period of time, eventually sell it, and if they take all their proceeds with them, they could avoid paying taxes or capital gains. The state of Hawaii passed the Hawaii Real Estate Property Tax Act back in the 90s to ensure property sellers paid for any capital gains during their ownership of real estate here on the islands. Regardless where you live or where you're from, buying Hawaii real estate is pretty simple.
It's simple.
Whether you are a U.S. citizen or not, anyone can purchase property here in Hawaii, and there are no restrictions that I'm aware of. However, when you sell your property, then it makes a difference where you live. You might be subject to tax withholdings when you are not residing here in Hawaii at the time of your sale. Yes, if you are not residing in the state when you sell, you could be subject to HARPTA and the taxes associated with the sale of your property. The tax withholding laws don't replace or increase the actual capital gains that are due. They are merely a mechanism to withhold a sufficient amount larger than the actual taxes due. It is to prevent the seller from riding into the sunset without paying any taxes. It's the buyer's responsibility to make sure the seller's withholdings are mailed to the tax office here in Hawaii. But in reality, it's the escrow company that withholds these funds from the seller's proceeds and sends those funds to the tax office. This subject is addressed in our real estate purchase contract under Section P1. HARPTA rules apply when you don't live in Hawaii at the time when you are selling your Hawaii property. HARPTA requires withholdings of 7.25% of the sales price, not the gains, the sales price. These funds are taken by the escrow company from the seller's proceeds at the time of closing. The seller must provide the buyer with an affidavit form N-289 certifying where the seller resides. The seller is exempt from the HARPTA withholdings when the seller certifies that he or she is an Hawaii resident person or entity and a Hawaii taxpayer with a seller's home address and taxpayer ID number. Other exemptions to the HARPTA withholding requirements are if the seller does not realize a gain or loss with the sale. As an example would be a 1031 exchange transaction. If the property was used as the seller's principal residence for the year before the sale and the sales price is $300,000 or less, not very many here on the Big Island. Or if the seller is an out-of-state corporation registered to do business in Hawaii and has a current Hawaii tax payment in place. Immediately after opening up escrow, the seller may also submit to the tax office an application form N-288B for the waiver or an adjustment of the withholding. If the seller can prove that he or she will not realize any gain from the sale or that there is insufficient proceeds to pay for the withholding required. If the tax office approval is not obtained before closing, then the escrow must send the withholding to the tax office. So that is HARPTA in a nutshell. Kind of confusing, but important to know if you're a seller. Again, this only applies to people selling their Hawaii real estate. Now, let's talk about FIRPTA. FIRPTA is the Federal Real Estate Property Tax Act that was approved by Congress back in 1980 and applies again to people selling real estate in the entire United States, not just buying. It applies when you are a foreign investor and don't live in the United States at the time when you are selling your Hawaii property. FIRPTA requires a withholding of 15% of the sales price, not the gains, that could be in addition to HARPTA if it applies. The seller is exempt from the FIRPTA withholding when they can certify he or she is a U.S. resident or entity, including resident aliens, and a U.S. taxpayer with the seller's home address and taxpayer ID number. Other exemptions to the FIRPTA withholding requirements are if the seller is an out-of-state or out-of-country corporation registered to do business in the United States and is current on their U.S. tax payments, or if the buyer intends to occupy the property as their primary residence for the next 2 years after the closing date. The required FIRPTA withholding is reduced as follows: 10% of the sales price for the property sold between $300,000 and $1 million plus, or 0% of the sales price if the property is sold for $300,000 and under. There are other potential waivers to paying the FIRPTA tax as a seller, but I highly recommend that you talk to your accountant prior to selling your Hawaii real estate to determine if you qualify for any of these additional exemptions to pay this tax or exempt altogether. Like HARPTA, this matter is addressed in the Hawaii real estate purchase contract under Section P2. HARPTA and FIRPTA primarily affect you as a seller in the state of Hawaii, even though the buyer is responsible for ensuring the taxes are withheld and paid at the time of closing. If you like this information and you want to know more about Hawaii real estate here in Kona, can you hit the subscribe button below, because I'm providing videos about real estate here each week and life on the Big Island and all things real estate. Thanks again for watching, and if you have any questions at all, reach out to me anytime at one of my contact sources below. Have a great week. Thank you again. Mahalo.